Hi, everyone. Jen Berbas with the Berbas Group in Austin, Texas, coming to you with the May real estate numbers. We've had a unexpectedly cool start to the summer. I hope everybody has some really great plans lined up and perhaps a plan to get out of Austin in August. We're going to just jump right into the numbers here. There's good news. There's some, not awesome news. So we have sales down 2% year over year. Under contract and pending is up 2.9%. There's a really good chart that shows it here in a second. That's pretty good. New listings. This is where it starts to not get great. We are up 8.7% with new listings year over year. And then active listings are up 17%. What that means is we have a whole lot more new listings, and what's on there isn't selling at a rate that much higher than last year, right? We have 3% increase in the pendings. The other thing I want to point out here is the implied math or the implied probability of selling. When sellers are coming to market, you can see that only 2,934 are pending, 2,934 are pending out of 18,956. I did the math so we could talk about it. That is 15% of the homes on the market are selling. Our sellers have to work so hard and be so purposeful with their pricing and their presentation to be in that 15% of the pool of listings that sells. We think that's a really important statistics, and we've been discussing that with our sellers. We've been having pretty good luck, probably because we're having really direct conversations about what it takes to sell. So that's good. Average sold pricing hasn't been impacted as much as you would think with this inventory. I think that's good news. I think there's just like this baseline buyer demand that's kind of remaining stable. Obviously, pendings has gone up 3%, so maybe that's true. Average sold price and median sold price is coming down a little bit, 3% to 4.7. Earlier in the year, we were thinking with what we expected inventory to come to, we're kind of expecting about a 5% price decrease. Now, it's not to say that every single house in every neighborhood is going to go down 5%, right? This is an average. This is Austin-wide metric. So don't think that it's going to impact your house, only 5%. It might be less, or it might be more. Average days on market is very high. It's up 21% from last year. That's 71. This is very, very different from neighborhood to neighborhood. We've been posting some things about this on LinkedIn. There's this heat map that shows us which neighborhoods a buyer market and which neighborhoods are seller market. This is super different from neighborhood to neighborhood. And also days on market and inventory in each neighborhood is incredibly different. So when we're prepping our sellers with days on market and when we're getting ready to go to market with a price, we actually go through just the geographical area around them and look at the market like a buyer to show them how many months of inventory they have on the market for their specific area, because that's what you have to do when you go to sell. You can't just use the broad strokes. You have to be really, really specific about that neighborhood. Some neighborhoods is more than 71 days on market. If it's a downtown condo, it's like 100 something days on market. Other neighborhoods are a little bit less. Circle C is like 2 months of inventory right now. So the days on market is a lot lower. Months of inventory, 5.4 months of inventory here. Like we said, 11 months in downtown condos, a lot less in a place like Circle C. So that again is super area specific. I mean, it's nothing new, right? We always say real estate is hyper local. We are a little surprised by the variation in metrics for every single neighborhood this month, or this time of the year. Actually, it's been happening for the last couple months. All right. This is the data that we collect internally. It is, the top line is inventory, 12 miles from downtown. Again, this is a chart that we started collecting because the Austin Board of Realtors data was coming out once a month. And you can see here between March and February, sorry, I have this up on my screen here. So between March 25th and the end of April, so 1 month there, it went up 20% in inventory. And this is exactly why we want to collect it internally. Not every month is going to be a 20% jump. On the months where it is a 20% jump, we want to know on week 2, on week 3, what's happening. We don't want to have to wait for that like 20% jump that we're not going to see until the Austin Board of Realtor data comes out. We're kind of hoping that we've reached our plateau and that this is going to level out now. We expect to see a little bit of blip of buyer activity again in September. It'll probably slow down July and August. It typically does from 4th of July weekend through Labor Day weekend, it can be a little slow. And then we have that blip of activity, especially in neighborhoods like Hyde Park. We always see it's either 1 week or 3 weeks in September where we see people coming back in. In neighborhoods like Circle C, you're going to see that activity a little bit earlier because people want to be in their houses before school starts. School starts the end of August. So you're going to see that kind of influx of activity a little bit earlier in August. This is a chart that I was saying shows that the pending units are up over last year. We expect this is going to be the highest for pending units in the year, and then we expect it to decline a little bit over the course of the rest of the year. I don't know if it'll remain higher than last year. That's just kind of an interesting thing for us to keep an eye out on. This is new listings by month. This is that 18% increase over last year. This is the time of the year right here, February, March, where new listings haven't quite come back yet, where we love to list properties. We think we get the best outcomes for sellers there. We just feel like that is where sellers get the most aggressive offers typically for their property. Active listings by month, way up. This is with the not so good news that we discussed earlier. And this is the 5-county metro average median sold price. Not seeing a huge impact on pricing so far with this big influx of inventory, which I think, again, points to some good, solid buyer demand. I am also surprised that pricing in Austin hasn't come down further than it did. And the reason I'm surprised by that is interest rates had such an incredible swing, right? So for every 1% increase in interest rate, you should expect a 10% decrease in the sales price in order to keep a buyer's payment static. So in order to normalize for the buyer's payment. And we've gone up tremendously. The lowest interest rates were like 3.5%, 4%. So we're up at least 3% from there. And we haven't seen a commensurate 30% drop in pricing. So I actually think that points to some underlying strength. We're just waiting for the job numbers to recover. Total sales are down 2% in the Austin area, and the volume sold is down 2.5%. Volume sold is basically the notional value, right? Indeed, job postings, it looks like maybe we've hit the bottom on the job postings. We would like to think that. We hope that is true. September, November here seem to have been the bottoms, and we seem to be coming up a little bit on the Indeed job postings. We have gone to the absolute value of job postings instead of the rate of change, because the rate of change stopped decelerating. And so we thought this might be a little bit more useful going. CNN puts out something called the Fear and Greed Index. There's a famous Warren Buffett quote: be greedy when people are fearful, and be fearful when people are greedy. So be fearful in 2021 when everybody is paying 20% more for properties, and be greedy when people are fearful. Austin market's down a lot. Maybe this is a good time to buy only if somebody's planning on living in their house for more than 3 to 5 years. You can't insulate yourself against short-term market movements if you are only owning real estate for a short period of time. I'm just kind of like the S&P. We're not day traders. That's not our job. Thank God. So Fear and Greed Index from CNN, this is on the greedy side. That means the stock markets this usually means stock market's really strong. Hey, everybody, thanks so much for spending the time with us. We always love being a resource for you. It doesn't mean that it's just going to be about buying or selling a property. After the big storm a couple of weeks ago, people were asking us for tree guys. We were getting our friends and neighbors and past clients on the to-do list for the arborist when there is tree damage. Always feel free to call us. We love that kind of stuff. We feel like that's where we really add value for you. Our philosophy is we are here to help you with all your real estate needs. And that might mean, getting vendors and helping you scope out repairs. And that every once in a while you may do a transaction. So if you have any questions, feel free to call us. We're always happy to be a resource for you.